Hello, it's Chad Bergman with Movement Mortgage, and today I am bringing on some amazing coworkers to talk about reverse mortgages and to really give you a quick overview of what it is and how we might need to have a conversation surrounding this amazing loan program that doesn't get enough help. Today, I'd like to welcome Jordan Chomko.
Hi, excited to see everybody.
And Harlan Accola with Movement Mortgage, National Director of Reverse Mortgage.
Great to see you, Chad. Glad to be here.
Thank you. Well, Harlan, I am so grateful to have your book in my hand, Home Equity and Reverse Mortgages. I know you put this out a number of years ago, but it's hit a lot of bookshelves, highly talked about, and we're grateful to have you on the Movement team.
Well, we're lucky to be here because there's a lot of folks that we can help that are not only clients of Movement, but our referral partners as well, realtors and other professionals in the financial world, attorneys and so on, because this is something that is the best kept secret and actually something that is regarded as relatively negative. And I think that's the first thing before everybody tunes out on this message because they heard the word reverse mortgages and they immediately went like that. That's normal and that's expected. I used to do that 20 years ago before I understood what reverse mortgages were. I specifically told people, whatever you do, don't get a reverse mortgage. It's a ripoff. It hurts the old people and screws their kids. And it's just not a good idea. And I was operating from a position of ignorance and I just didn't know what the details were. And there are some reverse mortgages that are bad. And in chapter 6 of the book, I talk about that specifically. It's called Drugs, Sex, and Reverse Mortgages. And for whatever reason, it's the most read chapter. People seem to turn to that first. But the fact is that reverse mortgages can be good or bad, just like investments, just like drugs can obviously save your life or they can kill you. Sex obviously can be good or evil, and reverse mortgages can be used incorrectly. And there's unscrupulous loan officers and investment companies that have taken advantage of people in the past and just kind of given us a bad name. And so we cover that specifically, that when a reverse mortgage is properly used, it is something that will accomplish 3 things. It will increase your cash flow in retirement. It will increase your net worth, which is kind of surprising. People think you lose something, but you gain more cash and more of other investments. And probably the most important thing is it's something that also decreases your income tax. And with all of the increase in the dramatic increase in home equity, it is one of the most underutilized pieces of wealth. In fact, a lot of times I show people a graphic that I refer to as the 3 buckets. Everybody has 3 buckets of wealth who owns a home. And bucket 1 is their bucket. It's their ability to make money, their ability to earn income on wages, commissions, small business earnings, whatever. And bucket 2 is the financial planner's bucket. And bucket 3 is home equity. And if you think about it, when you look at the top wallet, a whole bunch of money goes up to the top. We make a lot of money in our lifetime. And a lot of it evaporates and flies right out of our wallet. And we spend it on food and clothes and kids and cars, whatever. But we try to save money and give it to our financial advisor so we have some money for the famous time called retirement. And the more we put away in bucket 2 with our financial advisor, it's the perception is that it's going to be easier for us to retire. But the fact is that we have put hundreds of thousands of dollars into bucket 3. And at the same time, the increase in equity, look what's happened in the Denver area just over the last 4 or 5 years, dramatic increase in equity, huge amounts of money that has poured into bucket 3, even without us having to put money in there. So now you get down into the bottom wallet, the 62 plus wallet, and we take a look at bucket 1 and we say, well, now we can draw Social Security. We take a look at bucket 2 and we walk into our financial advisor's office and say, okay, I'd like to get some money out of my IRA or my cash value life insurance, my annuity, whatever, wherever I put money away for the future. And very few people, Chad, has anybody ever walked into your office and said, hey, I gave you hundreds of thousands of dollars. Can I have it all back?
Not very often. It requires qualifying and a refinance.
Exactly. And so what's weird is people have given us hundreds of thousands of dollars and they ask financial advisors for the money back, but they don't ask us for the money back because, like you just said, it requires a refinance, which is kind of difficult and people don't want to do it if they don't have to because it's a lot of paperwork and all that sort of thing. And then it requires payments. The beauty of a reverse mortgage is I can pull money out of bucket 3 by simply waving a magic wand, like I talk about in the Cinderella book that you reference. And we wave a magic wand and money comes out tax-free, and we don't have to pay it back until a year after we're dead. Now, that seems to be something that would be really should be in demand, because it is a guarantee from the government, not just from movement, but from a guarantee from the government that says, hey, no matter what happens, you do not have to ever pay this money back until after you're dead or permanently move out of the house, whichever comes first, both you and your spouse. So it's just a tremendous opportunity to change the way retirement is done when that money is pulled out of bucket 3 instead of bucket 2. So that's just kind of a real quick rundown, Chad, for your clients and your referral partners, that this is not something that's bad. You put money into an IRA, you take money out. You can put money into your house. And now because of the reverse mortgage, which first started by FHA in 1988, it's legal, completely legal and safe to take the money back out and still preserve something for your children at the end.
And to that point, Harlan, what's the burden or the impact on the family at the end? Or what's the thoughts on that piece?
Yeah, thanks for that, Jordan, because a lot of people think, well, this might be fine, but it doesn't end well. Sounds great, but this is not going to be good in the end. And that's really something that is a benefit. When we do a reverse mortgage, we want to get the adult children involved right away, because they will realize that not only is this a good thing for their parents, this is also a good thing for the kids. And my children we have 4 sons, and my children are thrilled that we're going to, that we have a reverse mortgage. I got one a year ago when I turned 62, not because I needed it, but because I wanted it. And so at the end, it's just like, think about it in the terms of a IRA. You have $1 million IRA, you take $200,000 out of it, the kids get the $800,000 that's left. If you used $800,000, the kids only get $200,000 that's left. Well, if you pull $200,000, $300,000, $400,000 out of $1 million house, well, the kids get whatever's left. So it's really no different. You have to pull money from somewhere. Either you got to pull it from bucket 1 and keep working, or you go to your IRA, or you go to your life insurance policy, or whatever it is, and you pull money out. And then whatever's left goes to your children at the end. The same thing happens with the house. There's just one little asterisk on that. People say, well, that's all well and good if your house is worth $1 million and you only use $300,000, then the kids get the remaining $700,000. But what happens if your house goes down in value and you live too long and now you owe $600,000 and your house is only worth $500,000? Now it didn't work out so well, did it? Well, actually, that's where the protection from FHA comes in. The children are guaranteed that no matter what happens, they will never have to make a payment. So the interesting thing is that the kids are guaranteed never to lose. They're not guaranteed to win, but they're guaranteed not to lose. If there's money left, it goes to the children. Or whoever the heirs are. If there's not money left, well, that money is paid for by FHA, not your estate, not your kids, not your grandkids. This is something that is covered with the insurance from the Federal Housing Administration. And that's a guarantee from our government as long as our government is in business. Because people say, well, yeah, but what happens? The government can change their mind. No, that's a contract that starts from the beginning. When I signed my papers last year, I signed a release of personal liability and I paid mortgage insurance so my kids will not have a problem, and neither will my spouse if I pass away first.
So just like a traditional forward mortgage, they don't have the ability to modify the terms of the mortgage once everything is signed, correct?
It's exactly correct. It's non-recourse. The papers are signed. Future loan terms might change. That's why I tell people get a reverse mortgage as soon as you possibly can, because things could change, and they have changed over the period of years. But the fact is that you do not have to worry about once you're signed on the loan that I signed last year. It's cast in stone. I'm good until I'm 150. It says that it's still like 2110 or something. So no matter what happens, I don't have to make a payment, and I don't have to worry about being upside down no matter how long that I live, or my spouse.
Got it.
Harlan, a lot of the clients that I work with are kind of in 3 buckets. One, they have a mortgage. That's probably predominantly, we have a mortgage, and even into retirement years, we have a mortgage. My parents do. Or possibly, if you're lucky enough to have your house paid off, that's option 2. But then we also have option 3 that we were talking about earlier, where it might be a combination of one of those, but maybe they want to, again, downsize or change, and that would be a purchase transaction. Are reverse mortgages able to be structured as a purchase?
They are. Reverse mortgages can be used as a line of credit if you don't need the money today. They can be used as a lump sum to pay off an existing loan. They can be used as a monthly check. If just like you put money in monthly, you can take money out monthly. And they can definitely be used as a purchase, which most people aren't even aware of. In fact, most real estate professionals, I was with a group of 25 real estate professionals last week, and not one of them knew that a reverse mortgage could be used for a purchase. So we've done a bad job of getting that news out, which is why we're sending this specifically to real estate agents as well, so that they understand the value. You know, there's 45% of people like me that either by design or by mistake are still making a mortgage payment when they turn 62. When my dad retired in 1981, less than 5% of people had a mortgage payment. Now, almost half have a mortgage payment. I always ask people, what's the purpose of making a mortgage payment? Why are you still making it when you don't have to? If you have more than 50% equity, you no longer have to make a mortgage payment. Just stop. Well, don't stop on your current mortgage or you'll go into foreclosure, but refinance from a forward mortgage into a reverse mortgage, which requires no payment, and the payment is optional. Even if you want to make a payment into a reverse mortgage because you can get the money back. You're certainly able to make a payment. And so if you have a mortgage now, just refinance into a safer mortgage that has an optional payment so that neither you nor your spouse have to make a payment if you don't want to. If you want to use the money to help your kids, you want to use the money to go on vacation, you want to use the money to fix the roof, you don't have to make a payment. But if you want to make a payment, go ahead and make it. And if you need the money back, we'll refund it to you without refinancing. That second group of people that you mentioned, Chad, the people that have their house paid off, often tell us, well, I've got my house paid off. I don't need a mortgage. Well, that's true. You don't need a mortgage. It doesn't mean you don't want one. Because if, let's say that you have a $700,000 house and you're eligible for $300,000-$400,000 in a line of credit, set it up. Like I told my dad, just get an umbrella when it's not raining. And unfortunately, Dad needed it when he turned 86 and had a stroke. A sad way to use the money, but that money was immediately available so he could take care of home care instead of going to a facility. And very few people want to go to a nursing home. And like I say, that's a sad way to use it. Some people use it to help their grandkids go to college, or they'll use it to buy a boat or an RV because the money is sitting right there in their living room, but they can't use it without activating it in the form of a credit line. So at least have it in place. You don't lose any equity by just leaving it sit there. But you might want to use it for something that just pops up as an opportunity in the future. And it also locks in your high valuation. If the home value goes down, you still have 100% access to that line of credit. It never goes away, like a forward line of credit, a regular HELOC that could be taken away as soon as there's a crisis like happened in 2008, 2009. And then the third group of people, there are thousands, I would say millions of people that are in the wrong houses. Old people like myself that they can still get around fine. I mean, I don't need a walker. I don't need a wheelchair, but I might someday. And so I want to be in a house that's all in one level. I don't want to live in a 2-story house like we used to have. So there's all kinds of people my age that are in the wrong house, and they can still operate in that house now. But, oh, just a minute. What happens if they have a health challenge? What happens if their wife or husband dies? What happens if things just are they fall and break a hip or whatever? So there's getting in that right house so that you can age in place even if something goes wrong health-wise. And the other thing is, forget about the health stuff for a minute. There's a lot of people that live a long ways away from their grandkids. The reason that I moved is because I wanted to be my grandkids. I was 3 hours away. We couldn't just go to their little Christmas program or run over and see their little thing at school or go fishing with them in the evening or whatever if you live 3 hours away. And so there's a lot of people that don't realize that they can move closer to their kids and save a tremendous amount of money by not having to pay cash for a house or make mortgage payments until they're 95. So the main message, Chad and Jordan, to all of your clients is don't try to pigeonhole this and say, oh, this is great for people that don't have kids. This is great for people that are broke. This is great for that widow lady who lost her husband. Yes, that's true. It's good for all those people. But it's better for the person that's 62 that doesn't need it and wants to enjoy life a little bit more, wants to be closer to their grandkids, want to help their kids or their grandkids buy a house, whatever the situation is. So just take a look. If you're over 62 or you have clients that are over 62, don't stop there and say, well, maybe one of them might work. No, actually, most of them. In 95% of the cases that I talk to people that are over 62, it's going to be some sort of benefit that's going to help them out in one way or another.
So much information and topics, again, in such a short amount of time, Harlan. You nailed so many great points. Again, I'm being schooled on reverse mortgages all the time now.
Well, the last thing that I mentioned is your clients just need to get in contact with you. They if they want to just check out the QR code to say, hey, I want some more information. We'll get them back to you. There's my personal email. You can ask me why I got a reverse mortgage when I didn't need one. All kinds of people say, well, did you need a reverse mortgage? No, I didn't need one. I wanted one. I don't need a car either, but I like to have it. It's a lot better than trying to go somewhere on a bicycle. So it's certainly something that have them get in touch with you. Real estate agents are in a position where they're going to be able to get more listings, sell more homes. Financial advisors can help their clients have their money last longer. And of course, all of your clients that you've worked with in the past that are aging, that are now past 62, they're in a situation where they can make a dramatic difference for their families. And it'd just be fun to visit with them a bit to know how we can help them individually. And we find money that's hiding in plain sight. I was just talking to somebody in Denver just a few months ago, and they said, we'd really like some money to travel a bit more. And I said, I see it. It's right there in your house. I was on a Zoom call like this. And I said, it's right there on your dining room table. There's $300,000 in $100 bills in your dining. And they said, you haven't been to our house. We don't have $300,000 on our dining room table. I said, no, you really do. So that's the message that we try to get across so strongly.
Perfect. Thank you, Harlan. Thank you for jumping on with us. We greatly appreciate your time and look forward to chatting more in the future.
I appreciate working with you folks, and we can change a lot of lives and have them ask, not only will we make an impact on their lives, but Movement is an impact lender, and every single reverse mortgage that we do helps one more child have the opportunity for a school. And we are just very anxious to show not only how we can make an impact on our seniors' lives, but just as importantly, doing well by doing good for others.
Well, Harlan, Jordan, thank you for joining us. Again, reverse mortgages are part of our lending experience and part of our conversation, especially when we hit that older age group of 62 plus. So if you have any questions, Harlan's information is down below. And of course, Jordan and myself can help you as well. Take care.